major shift is underway in the world of artificial intelligence. But according to a top strategist, we're still just getting started. BlackRock's Kate Moore says the AI spending cycle is far from reaching its midpoint, with many companies just beginning to map out their investment plans. But with the tech and its applications evolving at a breakneck pace, investors are left wondering what's next for this rapidly changing landscape. Good evening and welcome to our analysis of the latest developments in the world of artificial intelligence. Today, we're taking a closer look at the current state of AI spending and what it means for investors. According to Kate Moore, the Global Allocation Fund head of thematic strategy at BlackRock, the AI spending cycle is far from over. In fact, she believes we're still just in the first leg of it. This means that while some companies have already seen significant returns from their AI investments, many others are just beginning to map out their plans. One of the key drivers of AI spending so far has been the hyperscalers companies like Amazon, Google, and Microsoft that are investing heavily in the technology to power their own operations. These companies have seen strong price movement in their stocks, and investors have taken notice. But Moore warns that this is just the beginning, and that we can expect to see a broader adoption of AI across various industries in the coming months and years. Now, you may be wondering what exactly AI spending entails. Pete, in simple terms, it refers to the money that companies are investing in AI research and development, as well as the infrastructure needed to support it. This can include everything from data centers and servers to software and hardware. While some investors may be eager to see a quick return on their investment, Moore suggests that AI spending is more of a long-term play. Think of it like investing in infrastructure. She says it takes time and money to build a new highway or a new power plant, but the payoff can be significant in the long run. But similarly, investing in AI requires patience and a willingness to ride out the ups and downs of the market. But for those who are willing to take the long view, the potential rewards are substantial. Now, the key challenges facing investors in AI is such the issue of monetization. In other words, how will companies make money from their AI investments? Moore suggests that it will take a couple of quarters before we see a clear picture of how AI spending will pay off. But even then, she warns that the benefits may not be evenly distributed. Companies may see significant returns from their AI investments, while others, they struggle to make a profit. That's where the software side of AI investments comes in more. The software side of the industry is where the real opportunities lie and where investors can expect to see the most growth in the coming years. Now let's talk about the impact of corporate tax hikes on AI spending. Investors may be worried that increased taxes will crimp companies' ability to invest in AI, but Moore is not concerned. She points out that U.S. companies have a long history of managing their tax burden effectively, and that the impact of corporate tax hikes will be minimal. In fact, she notes that the 2017 to 2018 corporate tax cuts had a relatively small impact on net margins, just 40 basis points over a course of several years. That's a polite way of saying that U.S. companies are very good at managing their tax burden. But even with increased taxes, investors can expect to see continued growth and investment in the AI space. Finally, let's talk about the future of AI. According to Moore, the tech and its applications are evolving at a breakneck pace, and we're seeing new use cases emerge every week, and companies across various industries are starting to take notice. This means that investors who are willing to take a long-term view and ride out the ups and downs of the market can expect to see significant returns from their AI investments. In conclusion, the current state of AI spending is a complex and rapidly evolving landscape, but one thing is clear: the potential rewards are substantial, and investors who are willing to take a long-term view can expect to see significant returns. Thanks for joining us tonight, and we'll be back with more analysis soon.